Welcome back to Alpha Recap, your after-hours wrap of the biggest market stories. We close the day with a lot to unpack, and, as always, if you have questions, you can reach us at stockalpha.ai.
Great to be here. Big day. Macro surprises, AI chatter, and a bunch of company-specific re-rates. So much to dig into.
Totally. Let's jump right in with the headline. The May jobs number came in stronger than expected, and that pushed the probability of a Fed rate hike later this year materially higher.
Right, and the way markets reacted made that clear. Futures and prediction markets repriced the odds to roughly 52% for a rate hike this year.
Whoa. So, what really stands out here is how a single macro print nudged yields up and made risk assets more sensitive. Basically, higher yields mean higher discount rates, which tends to compress valuations, especially for long-duration growth names.
Yeah, absolutely. Analysts were pretty unanimous on that point. The jobs print was the gating factor. When the odds of more policy tightening moved up, it didn't just hit bonds. It rippled through tech, crypto, and anything priced on future growth.
And speaking of ripples, crypto felt it too. Bitcoin slid below the $60,000 round number and ended the day at about $59,775.
Psychology matters. Round numbers are technical supports. When those cracks, short-term volatility can spike. This was a week-long pullback that the jobs number deepened.
Okay, quick reactions before we get into the company headlines. Big move.
Not what anyone expected.
Right. And the other thing is concentration risk. The market closed with broad ETF softer. The S&P 500 exchange-traded fund was off roughly 0.5% pre-open, which underscored that macro sensitivity.
Exactly. That 0.5% move masked a lot of rotation. Some names ripped higher on idiosyncratic news, while breadth stayed narrow.
Let's switch to the company-specific headlines people were watching. There were a ton. Trulieve, Caterpillar, JP Morgan on Tesla, a FedEx spin. Tell me which one you want first.
Let's start with Trulieve, since it's a milestone. The company announced its subordinate shares would trade on the New York Stock Exchange beginning June 10th. That's a major uplist for the U.S. cannabis sector.
Yeah, that was huge for the space. Uplistings often reduce liquidity frictions and make stocks eligible for institutional and index flows. Trulieve's market cap was about half that of its larger U.S. peer, which keeps the scale question in play. But this was a notable step for the industry.
And not to be overlooked, Caterpillar posted a record quarter, and the headline tied that to data center power demand. Analysts flagged that data centers were driving durable industrial capex, which pushed Caterpillar to new highs.
That one was interesting, because it wasn't just a one-quarter beat. The narrative was structural. Data centers need large, efficient power systems and backup capacity, and Caterpillar's modular power products are in that sweet spot. Still, analysts cautioned to watch backlog conversion and commodity pass-throughs.
Totally. And then there was the JP Morgan note on Tesla. They dramatically raised their price target by about 228%, but moved the stock to hold. That was a bit of a head-scratcher.
Right. A huge price target lift, but a downgrade to hold. So, what they were signaling was that long-term upside estimates changed, but maybe near-term valuation and risk didn't justify an outright buy in their framework.
Exactly. Those are the sorts of idiosyncratic re-rates that keep leadership rotating. And speaking of rotations, the newly spun freight business of that major shipping company, FedEx Freight, rallied about 6.4% and closed at $167.84 on relative strength flows.
Market mechanics were in full display. Spin-offs, upgrades, uplistings. These catalysts were driving pockets of performance, even as broader indices flirted with stretch levels.
And that feeds into the larger themes we kept seeing across coverage today. One was macro data as a gating factor for risk assets. 2 was the tension between AI optimism and valuation discipline. 3 was idiosyncratic re-ratings reshaping sector leadership. 4 was narrow breadth and rotation-heavy markets.
Let's slow down and unpack that AI versus valuation tension. On the one hand, Anthropic was talked about again as a potential IPO, and there were corporate tie-ups like Hitachi and Intel. That rekindled enthusiasm for AI-era growth. On the other hand, some cybersecurity vendors didn't show the AI-driven revenue lift the market expected.
Right, so the debate became, are we in the early innings of an AI multiple expansion, or are investors pricing in more growth than companies can deliver right now? Analysts flagged that vendor earnings need to show AI monetization to justify higher multiples, especially when discount rates were moving higher.
I mean, when you step back and look at it, IPOs like Anthropic could re-anchor valuation benchmarks. If Anthropic priced at a lofty multiple, private market comps could be repriced upward. But if the IPO underwhelmed, that would have the opposite effect.
And that's why people were watching IPO pricing signals closely. SpaceX and Anthropic could both tell us how retail and institutional demand get allocated, which then feeds back into early-stage valuations.
Quick aside, analysts also pointed out a classic concentration risk story. Global market highs can mask that gains were concentrated in a handful of names while many households stayed underexposed. That concentration could worsen volatility when macro signals changed.
Yeah, that was in the Bank of America and MarketWatch notes. When leadership narrows, headline moves in a few names can drive headline indices, but the underlying breadth tells a different story.
Let's do a couple of short takes here. Anthropic IPO watch. Data center capex supporting industrials. Cannabis uplisting advances market structure. Crypto tied to yield moves. Simple.
Short and sweet. Now, moving into the implications for different investor types. This is where the practical takeaways live.
For long-term buy-and-hold investors, analysts said structural themes like AI and data centers remained intact. But the higher probability of Fed tightening meant it was prudent to rerun valuation inputs, discount rates, and terminal growth assumptions in financial models.
Income and dividend-focused investors saw a mixed picture. Names tied to infrastructure and industrial capex were showing backlog-driven cash flows, but tighter rates were making alternative yield options more competitive.
Active traders and quant funds had a feast. Narrow breadth and high turnover names created short-term arbitrage. One semiconductor short exchange-traded product jumped about 6% to $5.20 on heavy turnover. A reminder that headline moves created both opportunity and higher execution risk.
And retail and IPO-interested investors needed to watch allocation mechanics. MarketWatch highlighted that retail allocation rules can materially affect pricing and early aftermarket behavior for any big IPO.
Okay, let's get tactical for a minute. Analysts suggested monitoring further labor and inflation data because the market reaction to May payrolls showed how sensitive prices were to incoming macro prints.
They also said to track Fed odds evolution. A move above even odds for a rate hike forces a rethink in discount rate inputs, which can compress multiples, particularly for high-growth and AI-exposed names.
And watch IPO pricing signals. Anthropic or SpaceX pricing could tell us how much public capital was chasing AI and private asset exits at current multiples.
Short-term technical pivots were on the radar too. Bitcoin's breach of 60,000 and concentrated equity moves signaled greater intraday volatility, so liquidity and position sizing guardrails were a sensible watch point.
Earnings mattered as well. Analysts noted cybersecurity vendors that didn't show AI-driven revenue expansion increased the bar for the next round of upgrades. The market was basically asking for proof of monetization.
Let's do some quick, candid reactions. Wow, that's huge.
Yeah, that tracks.
Honestly, I was a bit surprised by the speed of the Fed odds reprice.
Same. It reminded me that markets incorporate new information very quickly, and that can change risk posture in a hurry.
Before we wrap, a bit more context on a couple of the big movers. Trulieve's NYSE listing on June 10th was more than a PR event. Uplistings can unlock index eligibility and broaden institutional access, but the sector's structural constraints, like banking access, still mattered.
Caterpillar's record quarter suggested structural demand from data centers, which could support durable order books. Analysts liked the narrative, but wanted to see backlog convert into cash flow without unexpected commodity cost drag.
And with Anthropic, an IPO could be a market test for pure-play AI valuation. The multiple and revenue traction disclosed would influence both public and private benchmarks.
The big picture, then. Markets closed the day at an inflection point. Macro data nudged policy odds higher, and volatility ticked up, while idiosyncratic catalysts kept rotating leadership across sectors.
Analysts broadly agreed rate path uncertainty would be the dominant near-term force, but they diverged on whether structural growth narratives like AI adoption, data center buildouts, and sustainability could sustain current multiples.
So, final takeaways: short, practical, and clear. 1. Macro was the day's headline, with labor data lifting Fed hike odds and compressing valuations for rate-sensitive names. 2. AI optimism was real, but investors needed proof. Earnings had to show monetization. 3. Idiosyncratic catalysts were reshaping leadership even as breadth stayed narrow. 4. Monitor labor, inflation, Fed odds, IPO pricing, and key technical levels like Bitcoin's $60,000 support.
And a reminder, analysts note trends and probabilities. This is informational only. It isn't a recommendation to buy, sell, or hold any security. And it isn't personalized investment advice.
All right, that's our recap. If you liked this format, tell us at stockalpha.ai. And hey, if you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai.
Thanks for listening. We'll be back after the next close with more analysis and the stories that moved markets.